Good morning, everybody. This is Brian Patrick with ForexTradeAlarms.com, and I have a new video for you today in response to a few questions I've got about carry trades. I've had a few people write in and want to know what carry trading is, so I thought I would record a brief video primer about what carry trading actually is and how you could potentially use it in your trading toolbox. Now, carry trading basically involves holding a currency pair, let's say the Australian US dollar pair, for a long period of time in order to reap the rewards of the difference between the two currencies' interest rates. Okay, it's a very simple process. It is definitely a long-term trading strategy. Now, you certainly can earn some nice bonus money, what I like to call it, on the short-term basis. But carry trading as a whole is generally reserved for long-term trading portfolios. Now, your large investment banks and hedge funds carry trade all the time, but retail traders do it as well, and I hope you will get some good information out of this video. Now, I want to give you a couple examples of a few currency pairs that might be good candidates for carry trades. First of all, we want to go to dailyfx.com, DAILYFX.com. Now, here on their homepage, you want to scroll down all the way to the bottom right corner and look for this box that says central bank rates. Okay, now before I go any further, I want you to know that this site, dailyfx.com, is owned by Forex Capital Markets, better known as the broker FXCM. Their ad is right here. But if you click on this link here, and if you click on Contact Us, it will take you to the FXCM. Now, their platform, TradeStation 2, is, as far as I know, one of the few trading platforms that actually is upfront and shows you the swap or the rollover that you could either earn or pay on your account when it's held overnight. My traditional brokers I use won't tell me up front. They tell me it's automatically calculated at the end of the trading day and it's applied to your account, but FXCM will actually show it to you. Now, it may change a slight bit based on, what happens at 5 o'clock and when they close your position. And before I go any further, you need to realize that when you carry a trade from one day to the next, let's say your broker's based in the US, New York, and their trading day ends at 5 p.m. Let's say you've got a buy for the Aussie US dollar. They're actually going to close that position for you at 5 p.m. and then open a new one seamlessly. You're not even going to know it. They're going to do it automatically and then either pay you the interest or charge you interest depending on the interest rates of the currency. Okay, so again, this all happens automatically. I'm sure you've seen the swap or rollover figures in your trading platform. That's basically what's happening. Okay, so we're on dailyfx.com, their homepage. We've scrolled all the way to the bottom right corner and we've looked at this box with central bank rates. Okay, and carry trading involves the premise that you want to buy a currency pair that has a high interest rate, and the lower part of that pair, let's say we look at the Aussie US dollar, we want to look for a currency that has a low interest rate. So if we look at the Australian dollar, it currently has the highest interest rate on this chart, 4.5%. The US dollar is at 0.25%. Okay, so if you're buying the Aussie dollar, the Australian US dollar pair, the Australian dollar has an interest rate of 4.25 and the US dollar is 0.25. You subtract the interest rate on the bottom, for example, the US dollar, from the interest rate at the top, the Aussie dollar, which would leave you a net interest rate of 4.25. Okay? You can also, let's take a look at the New Zealand dollar. That has an interest rate of 2.75. Okay? If you were to place a buy on the New Zealand dollar, US dollar, you would actually net an interest rate of 2.5%. Okay, that may not sound like a lot, but when your account is leveraged, let's say it's leveraged 50 to 1, 100 to 1, 200 to 1, I think you'd actually be surprised at the amount of swap or interest that you can earn. Now, this is definitely a long-term trading strategy. We're talking weeks, months, and years that some of these positions are held in order to realize significant interest gains rather from the difference in the interest rates. Okay. Now, let's say it looks like the Aussie US dollar is a net of 4.25. That's basically one of the best on the chart. The only one better probably is the Aussie yen. You want to buy the Aussie yen, let's say, to get a net interest rate of 4.4%. Let's say you buy it today, you hold it for 6 months, a year, and at the end of you liquidate your position in 6 months for a year, and you've earned all of this interest, compounded because it's leveraged. You really need to speak to your broker about how they handle that. But theoretically, at the end of the 6 month or year period, you have earned a little bit of money every day because of the difference in the interest rates. Now, one thing you need to realize though is that let's say you want to buy the Aussie yen in order to take advantage of that interest rate gap. Well, let's say you buy it today and it goes into a 6 month downturn. Okay, yes, you would definitely earn interest every day on that position, but you know what? Unless your account is huge or you have traded with super small lots, your account is going to be in drawdown, possibly a margin call. So you don't want to cut off your nose to spite your face. You don't want to have a gain of, let's say $10, $20 a day, yet your account be wiped out because you're trading against the trend. Okay, I hope you can understand what I'm saying here. Now, what I like to do is I like to look at this swap and this rollover, if you want to call it that, depending on your platform, as bonus money. It's an extra $10, $20 a day here and there, depending on what currency pair you're trading, that sort of thing. Does it add up over a long period of time? Yes, it most certainly does. But again, you want to be mindful of the trends of these currency pairs, because there's no point in earning 10 or 15, $20 a day if your position is wiped out because it's a short market and you've got a long-term buy in. So I want to highlight some of the pairs that you could potentially use. You could potentially go along based on the difference of the interest rate. Okay, as we see, the Aussie and the US dollar has a difference of 4.25%. The Aussie yen is even better. 4.5 minus zero point 0.1 is 4.4%. Now, the New Zealand is not too bad at 2.75. The New Zealand dollar would be 2.5. The New Zealand yen would be 2.65. Okay, those are some possible candidates for long-term buy trades. Now, you can also do this for sell trades too. You would just find a currency pair. Again, the first currency pair would have the lower interest rate, and then the one on the bottom, let's say the euro Aussie dollar. The euro has a fairly small, a fairly low interest rate of 1.0, and then the Aussie dollar has 4.5, so you actually would yield 3.5%. So if you were to sell the euro Aussie dollar, then you would realize 3.5%. Okay. So again, this is a long-term trading strategy. It's not for the faint of heart because, in order to get the best gains, you really need to hold the positions for quite a while. And again, there's no point in entering along on the Aussie dollar if it's in a downtrend. Okay, yes, you will earn a few bucks per day, but your account's could get wiped out if you do it wrong. So you definitely want to think long and hard about entering carry trades. Why don't you open up a demo account and take a look at one of these pairs: the Aussie US dollar, the Aussie yen, the New Zealand US dollar, the New Zealand yen. Okay, and since it's a demo account, fund it with $100,000 and enter a buy at one lot and see what happens. I think you'll be surprised at the amount of swap, the amount of rollover that you can earn per day. Just take a look at the charts and do some experimenting, and I think you'll be surprised at the results. Again, you need to use caution when you carry trade, and most of your big banks are doing it, your hedge funds, those sort of large institutions, but retail traders can take advantage of it as well. So throw it on a demo account and watch that swap add up. Again, this is Brian Patrick with ForexTradeAlarms.com. If you have any questions about this video, shoot me an email to support@ForexTradeAlarms.com. We're still answering general questions from our members. Send general Forex questions to questions@ForexTradeAlarms.com, and we may just post the answer in our members area. So I hope you've learned a little bit of information from this carry trade primer, and we will see you next video.